The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. You just want to give me a hug and a squeeze. Anyway, another wonderful day out here, and we've got a market that's kind of manic depressive out here. It's a little manic in the mornings and a little depressive in the afternoons. We're off 4 points on the S&P cash. Feels like 40, doesn't it, with these tight trading ranges we've had over the last few days, or even the bigger trading range, which has been rather narrow. But we'll continue to keep an eye out. It reminds me of some really bad jokes. But anyway, it is what it is. But off 4 points, 2 billion shares on the New York Consolidated tape as we start the show, so we'll watch it. So volume not terribly bad. Was very, very light for about 2 hours as we hung around unchanged. Now as we go into the close, and we're off 5 points on the S&P cash. A little pickup, I wouldn't say huge. So we'll be watching that to try to divine the path of least resistance. As always, I take your phone calls at 877-927-6648. And since I'm not home today at my palatial estate, 9 stories in a bunker below Tampa, then you'll have to call in today or post a message in the den. But that would be it. Anyway, we're going to have a great day, I think, out here. Getting ready for the weekend. A little rainy down here in Tampa. The after effects of all those tornadoes across the Midwest, bringing a little rain into my world. Of course, summer has finally hit Lake Wobegon, Florida, and it's starting to get a little steamy. Air conditioners starting to run all the time, and we're getting ready for 2 months of fairly decent weather, 2 months of really hot weather, and then, of course, a beautiful fall to Christmas. And we'll report about living in God's country almost every day. Anyway, as always, we like to start off today with history. And in 1933, Franklin Roosevelt signed a new securities. In fact, I forgot about this already. Had signed in the new Securities Act of 1933, requiring all issuers of stocks and bonds to publish a prospectus disclosing risk, conflicts of interest, and ownership positions. Says Roosevelt, the act is thus intended to correct some of the evils which have been so glaringly revealed in the private exploitation of the public's money. With the public crying for revenge on Wall Street after the crash of 1929, the bill had passed the House of Representatives without any debate or a recorded vote. The Senate had debated it for only 2 hours, and it went through. And funny enough, in that part of that 1933 was a law saying, guess what? That you couldn't collude or get together and create pools without publicly disclosing it to the SEC. And there are some other rules about creating cartels for moving and manipulating stocks. Why is that so important? Well, we find out today that the SEC is reviewing all those people that tried to go after the shorts that Ackman had on HLF, Herbalife. And if they violated some of those laws, the penalties are quite severe. So when we heard last week that the Godfather and Ackerman had got together and buried the hatchet, I have a feeling that Ackman dropped a dime on the guy. I think he probably had his smart lawyers looking around and found that these guys probably had gone after and done something fairly horrible and had colluded. And I think that's why we got the truce last week, probably with a idea, because that truce kind of came out of nowhere. And that was very interesting to see those guys who have hated each other since 2002 or 4. They started calling each other names back then. So HLF, of course, under an FBI investigation. Now all the people that were up against Ackman are in this. And if I remember right, there's like 2 to 5 years if you're found guilty of any of these things, of colluding. So it's going to be very interesting to see what and if anything happens. My guess is they'll charge them with something less than that, and they'll probably pay a wonderful. Is my cup out? Move it out of the way. Probably find a lesser way to charge them $1 million or something. Well, I'm going to move it just a little farther and push it. There! Hopefully my cup is out of the way now. They must have gone wide frame on me. Joe Kennedy, one of the first SEC commissioners? I do not know, since I think that was right after that question in the den, was Joe Kennedy one of the first SEC commissioners. If he was, it wasn't very long, because I know that he left, I think, in 1932 to go to England to become the ambassador to England. And he was busy over there causing all kinds of problems and telling everybody how he hated the Jews. Old Joe and his cabal of other people in the United States, pretty big on anti-Semitism. But he did some other stuff. He drafted the SEC framework, someone said in the den. Anyway, I thought that was kind of interesting that you see, when you hear something like that, your little spidey sense should go off. And even though you may not be able to make any money on something like this, putting 2 and 2 together and intelligent speculation is why some of these things happen out here. Anyway, that's pretty much it on the news of the day. But we will get into some other stuff. Again, you can give me a call at 877-927-6648. You can also put a message in the den if you want me to look at some stocks. I'm going to just take a quick look at here and see what we've got. And we're off 4 points on the S&P cash. So 1880, really not going to see any acceleration in this market, I think, until we get below 1868 again on the S&P cash. That is pretty much where we've seen all the volume come in. Made a comment in the Tech Insider today. Maybe it'll come out here. And maybe it's just the way it seems to me that everybody wants to buy a dip. No one wants to buy a breakout. And we get up to those breakout levels every time. And as soon as it comes down and someone sees 2 points lower, they're more than willing to buy the dip, but they're not willing to buy the breakout. So we've got a bunch of dip buyers, and without a dip, they won't buy. With a dip, they will buy, but it won't go any higher because they won't buy it once it's starting to break out. This is a kind of endless Mobius loop of thinking that I guess probably gives us this kind of market that is so wound up and tight. Wound up like a nice watch spring, actually. And, of course, the longer we sit at these levels and spin around, the more energy we are creating to actually, what are you going to say? Put back together the energy, the steam, to either break out of this thing or break lower. I am heavily invested on the downside of this marketplace. We talked about one of my stocks that paid off yesterday during the show, and we're going to talk about that again, maybe a little bit more tonight with Tom O'Brien in the Tech Insider Hour at 4 o'clock. But it is going to be interesting. We've got a lot of stocks that were moving after hours. I'm going to start looking at those today. Let's see. Oh, that's what I wanted to do. Hang on just a second. It's hard for me to type and talk at the same time. always seem to do one or the other fairly well, but not both. I have to mumble and talk. Oh, that's one I wanted to look at. There were only a few stocks in this earnings season so far that have really done anything in the way of revenues. I did want to pick up one and take a look at it because I really didn't have a chance to look at it for very long today. It is one of the stocks that's up and up strongly, but not a lot of volume. And again, even these stocks coming in with better earnings and better revenues, pretty much popping up to previous highs. Volume is not bad out here. You needed basically 2 million shares, so you got it. But it's not doubling and tripling any of these things. This looks to me like it'd come up to 231. This is Wynn Resorts, by the way, if you're just listening. And Wynn Resorts, nice little bounce out of here today. Nice gap up. But certainly you would think maybe we could get in that 3-4 million share range on earnings today. Pretty quiet. But the reason I did want to bring this up is this is one of the few that didn't just come in on the hair of its chinny chin on revenues. It actually had growing revenues. Of course, Wynn Resorts has a lot of casinos over there in Macau, and business still fairly decent at those casinos, and that's, I think, what people were really interested in. There's always going to be sectors, even in a down market, that are stronger. And, of course, when you looked at the way that some of the casinos here in the United States have reacted, not so good. Probably more of an off-case scenario out here. So, anyway, got a nice day, 2.5 million shares there. So we'll continue to watch it. But I guess I wanted to really get back into just how many of these stocks that have come out. I've looked at earnings at least briefly on probably half of the stocks that have come out. And a lot of these stocks are so small, no volume or something, so I don't spend any time on them. But, you know, if they have some decent volume, maybe I could get a trade into them, even if it's one day. I'm kind of taking a look at them. Almost all of them are coming in on the revenue numbers, either right at the revenues or not even making them. And when you go back and look at the lineage of where those numbers came from, they started off much higher for the original discussions with the analysts just 3 months ago, and almost all of them have been brought down. Now, part of that is the weather in the Northeast, but I noticed that even companies in the South and down here also had kind of weak quarters, whether there was bad weather or not. You got to think that some of those people in New Jersey came down here in all that miserable bad weather, would have been spending money down here. So I think it was a fairly weak quarter, weather or not. Nice little pun. Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome back, folks. I forgot to check out the den, and I will here in just a second, as soon as I figure out how to do it, where it's at. There it is. Slow a day. Anyway, we are looking at rack space now. The reason I brought that up is options kind of moving around on this. This thing has earnings, I think, the 10th or the 12th of May. But we've discussed just how much the problems with Amazon and now Microsoft and Google getting into price wars in the cloud services spaces, at least just for providing the space. IBM, Microsoft, all making huge gobs of money on selling software to go into that space, so they really don't care. It's a loss leader to them. Companies that are more just truly a cloud services provider that doesn't write a lot of their own software, Rackspace, having kind of a hard problem making any cash. And it looks to me like they're going after this. When I looked at it a little earlier, looking maybe even continuing down into earnings in a week, I guess almost 2 weeks down. But very interesting taking a look at it. Also very interested to watch LinkedIn, LNKD. You look at the earnings right off the bat, and they don't look that bad. In fact, the thing was going to open up fairly decently today. Found a bunch of sellers. You had a high volume low out here on April 28th. So as technical analysts, we probably wouldn't have bought it here at TFNN until it had tested that low. Of course, you're going to have even more volume today. That day you had 7.4 million shares. You already have 7.5 million shares already. And to me, this is probably the one that is hardest to figure out. Maybe I had the whole valuation thing on this way off, because I thought this one I thought it was going down. I thought it would hold up better than the rest, and it really hasn't. And I may have found out why, and we'll talk about that on the Tech Insider Hour tonight with Tom O'Brien. But interesting moves out here, so gonna have to keep an eye on it. What do we have here? We're off. Every time you think this market's going to go down, it bounces again because we've got those dip buyers. They shall be known as dips. Anyway, we've got some other stocks that are moving out here, so we're going to go and take a look at them in the meantime. And see. Again, you can give me a call at 877-927-6648. Got a couple of minutes here. I'm going to check in on some of the stocks that we talked about maybe a couple of months ago. Has it been a couple of months? Maybe a month ago. I think it was right in this spike area on fuel cell. We spent probably the better part of the show in the studio talking about how fuel cells are the technology of the future and always will be. What we have seen a lot of these companies lately has been them issuing additional shares back up at the top. And let's see if I can actually find it here. I need the symbol because I just heard this and didn't have a chance to really check it out too far. Ballard Power, BLDP, another one of these companies. BLDP. Every time these companies ever get any real movement, they issue more shares, and we've seen this in several other companies. I think it was, maybe it was Fuel Cell. But Ballard, I noticed it did just a few days ago, did the same thing, and this is this little drop. Anytime they get any action at all in this sector, it's always about issuing more and more shares. And that's probably why I've not been too hot on them. There's a fundamental reason why I went into at length in the Tech Insider 2 weeks ago. Or was it a week ago? I think it was 2 weeks ago. But it's these are going to be tough. And once those shares come out, I suspect that we're probably going to see this thing back at the $3 range once again. Technically, the chart doesn't look all that bad. The problem comes in when they start issuing those shares, and then the chart that looks fairly decent now and the volume patterns that look good, suddenly all those new shares are on the market, and the stock tends to get creamed again. But I'll try to look at the news during the break, but maybe I can find it here right now. Ballard Power. Yeah. All these guys are filing these shelf prospectuses, which means that they can dump the shares on the market at any time. So just be very careful if you're in any of these fuel cells or companies or in the solar companies to see whether these companies have filed these shelves to distribute more stock. Just keeping an eye on it. Anyway, we'll be back in 1 minute, maybe a little longer.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And let's go to Frank in Baton Rouge. How you doing today, Frank?
I'm doing great. David, thanks for taking my call. I was wondering if you could look at IBM on a weekly chart.
Okay. What are we looking for?
Well, I know that I'm reading Tom's book, and so I'm trying to incorporate that into just the flow of volume rising on, up days or down days, giving an indication of future price. On a weekly chart, if you'll see, IBM has about 4 or 5 large wicks on the candles for the past 4 to 5 weeks. I have been frustratingly trying to short IBM, and it's been a little challenging today, and yesterday it is down. I see, going back the past 4 or 5 weeks, long wicks.
Yeah.
What is your take on this?
Well, I have to tell you that I bought puts on this thing when it went to 196, and I think I bought them at $4, and they're printing off at about $7 now. So there's some money to be made, but I don't think you're shorting the equity.
No, I'm in the I'm in the options.
Okay.
I have some of the stock and some of the options.
So what did you buy for the options?
I got some 197.50 puts, and when it was at 196 2 days ago.
Okay. So I mean, you should be doing well.
Well, I've tried to. Well, what I'm leaving out too is I've also tried to. I'm a little early to the game too, so I was shorting it up and having it go against me earlier.
Oh, okay. So you didn't.
Okay. Earlier positions.
Yeah, I mean, unfortunately, I'll play options about maybe 2-3 times a year. I think you're okay, but you need the market to crack, which is going to be tough. And you did the exact right thing, though. You bought puts on this thing because you need some kind of leverage. They're not going to let this thing move hugely. But I think we're probably going to see a lot of people starting to sell out of this one first if the market does start to slide. But I would not be surprised to see you get your cash out of it. I think we're going to look for this thing back at 172. So,
I agree. I mean, and Tom has felt my gut tells me that this wants to go down.
You know, they're spending a lot of new money on this Watson project, $1.5 billion to get it started, but it's going to take a year, maybe 2 years to get anything out of that. In the meantime, they're trying to sell off as much and fire as many people as they can. Right. But I don't think that there's a whole lot here, and other than keep pushing this thing up and distributing it out, the question is just when they're going to be out of it. If you don't see any real big drop here probably in the next 2 or 3 days, my guess is that you'll probably want to cover and hope that this thing bounces up to 197 again where you can buy them again. But I've gone out to June's, so I'm going to give this thing a lot of time. Okay. What month are you in?
I've been rolling about 2 weeks at a time because I didn't want to pay the premium, as much of a premium, so I've been just trying to manage.
Yeah, I'm not a big fan of that. Not that it doesn't work, but it seems like what you're going to do on this, on IBM, is if that trade's going to work, is it's probably going to come in, you're going to have all the bad news, whatever it is. I suspect maybe it would be something like the CEO leaving, or there's going to be probably some kind of news thing driven that's going to really get IBM headed to the downside, maybe even if the market doesn't head down. And I just don't think that you can do that on a rotating 2-week basis. I mean, you probably need to give 45 days out at a time, or you're just really going to get torn up with the difference between the bid and the ask on these.
Right. So premium's pretty high though too. The further you go out, I mean, the premium is running. I don't know. To me, $4 for 190s wasn't a whole lot the other day. Oh, you paid $4 for the 190s?
190 Junes.
190 Junes. Okay.
Yeah. So they're printing. They're printing they're printing around $7 today, a little under. So I'm up 280 or something on them. So it's not too bad, but it's if I'll tell other people too. You had about 2 days, this last 2 days, when the VIX was low, where people were just dumping these puts out here at very low dollar levels. So if you bought some out of the money ones, you could hold them for some time on $4, controlling a $190 stock for 45 days. I think a pretty good bet, especially if you believe in the stock, the story of the stock headed down. This energy in the actual chart. Let me go back to what I'm looking at here, which is not a weekly chart. I always like to look at every day out here, so hang on just a second.
As a side note, they've been buying their own stock.
But did you hear
pretty aggressively?
Yeah, did you hear that they stopped?
Right. Well, they had $8 billion for the first 3 months, and they're doing $5 billion for the remaining 9 months. But that's that was really kind of working against me to some degree. I mean, they're doing so much financial engineering across so many different. Yeah,
but they've been doing it for so long that whether or not it's going to actually ever work out.
Companies no longer invest in what products they do. They devote a whole lot of energy to
it's
managing their stock price.
Yeah, and that's what she's done. But I think even though we have some light volume down today, I think there's a good chance that we hit and test that 197. And at that point, if we don't have any volume, I'll probably take my puts and run.
Well, I'm up on my puts right now. Would you take profits on them? I'm a 197.50. I'm in the money.
Yeah, but I mean, how are you? Have you recouped your cash?
Well, I had different weeks expiring, so I have the ones that are expiring out that I'm 197.50. Yeah, I mean, I've about almost doubled my money. I mean, when I'm in the money, probably just because probably, like you said, you picked up some of them at a disadvantage. I think your risk reward would probably be a little tough to justify today. So yeah, if I were you, I'd probably at least take half of them off. I don't know how many you have. Okay, so you don't see this current last 2 days sustaining?
Well, I think it's going down to 197. I think
But
it's.
I mean, like we're down yesterday and today. Do you see this rolling into next week or not?
I think you're probably going to see down Monday. I think Monday we're going to close that gap from the 28th. So
Okay.
I think that's going to be Monday. And at that point, like you have today, very light volume. If we don't have any volume, I'm going to be looking at probably exiting these and taking some decent cash out of them. But
Okay.
it's, I mean, you had a very tight window over the last 2 days where you could have bought puts on a lot of different things. I bought puts on 3 different stocks, and they're okay. I'm not gonna retire on any of these trades yet. IBM's the best. IBM trade was the best of the bunch, so maybe that'll help me out even if the market goes against me on Monday. But
Okay.
I think it's okay. I just would, if I were you, probably quit trying to get 2-week options out and give, at least on IBM, a longer-term view on this thing, because I think timing it and trying to find the time where the CEO resigns or they come out with the bad news that I think is inevitable is going to be hard to say it's going to be in the next 2 days. I think you have a much better chance saying it's in the next 30 or 45 days.
Okay. And then I have a technical question. When you have do have a long wick on bar and there's a high volume, do you consider that an up day or a down day? Because that volume on that long candle bar that's just a wick, in Tom's world of like volume analysis, would that be considered a rejection of price if it goes up and then trades down?
Well, to me, the whole rejection of price thing, you kind of need to be watching the day and see what happened. You know what I mean? Just by looking at the wick, it can tell the right story, it cannot. Normally, I won't read a lot to it unless I was watching the market and watching that stock that day. So
I've just never seen 5 wicks on a stock. I mean, usually one of a really long nature or 2 starts to turn that stock around, whether it's at a bottom or a top. And I'm looking on the weekly chart. That's just what makes me go to it more like a magnet.
I like candles, and they tell the story of the day. They were a lot more prophetic 14 years ago before all the computers figured out how to program them in. And I noticed how well they work diminished. I think they still work. I just would probably, you may be trying to read a little bit too much into them or give them too much weight. Let me put it that way. I still, first thing without looking at the candles, look at the volume in this thing. And to me, before I would look at anything else, wicks, candles, everything else, I'm looking at one thing, and that's that high volume low. And that is the full house out here on that stock. It's not, hoping for one better card. You've already got something that most likely is going to get retested in the next couple of weeks. There's nothing else out here that high volume, well, at least the last high up here at 199 had 8.4 million shares. You still got 11 million shares back at that low, which tells me that you probably are going to come back, even though that was an up day and everybody started buying it, that the stock's going to come back into that level. You want to see no volume and no interest at the bottom of those moves, not that, before you even get into the candle part of it. I'm going to say the candle is the gravy and the volume is the meat of the sandwich, the meat and the bread. So
volume dropping in those last bit of days activities is not encouraging for a further down move. The
last 2 days aren't, but this stock is kind of a psycho stock. Like I said, it's always being manipulated. No one gets fired for buying IBM in a fund, and so it's always one of the favorites out here, and they kind of like to hold it up. But for the most part, I have a feeling that we're getting very close to the end of the road where IBM's buying of the stock does anything. I'm just seeing too many other companies like this get hammered. So I'm thinking you'll know when it gets either into that gap on Monday. We need about 5 million shares, and when it gets into that low at 187, you need 11 million shares to really see this thing starting to pick up. But I think that it's only with your being leveraged with the puts, I think it's still a good trade. So okay.
And last question for you is your newsletter. I haven't sampled it yet. I'm doing Basil's right now.
Mm-hmm.
Do you give pretty much active recommendations, kind of over a few days or weeks?
Yeah, mine may be a little longer than Basil's.
Okay.
Last time I looked at his newsletter, his trades were maybe a little shorter than mine. But no, I'll say, okay, buy this, sell that, or short that. And a lot of times my trades are a week or 2 weeks. So I know he does a lot of his Chapman waves, and a lot of times those 3, 4, 5 days and stuff like that. So just on overall appearance, I think my trades are probably a little longer in time, but that's probably that probably is a big difference. But like I said, you can do 30 days for no charge. So when you get done with Basil's, if you want to look at mine, you can do that too. You can. I think you can do both of them. Yeah, you don't have to do one at a time. Anyway.
Until I quit my job, I can do everyone. Okay.
Yeah, that's
all right. Well, I do appreciate your time.
Thank you for the call.
Okay, bye-bye.
And see, what else do we have out here? Okay, now what else do we have going on? Oh, I was going to look at a few stocks. Movable drive. That's not what I wanted to do. OneDrive presentations. Test. There we go. Let's take a look at a few of these things. Okay. ACI Worldwide, I had this in the newsletter this morning. Some of these stocks not looking all that bad. In fact, actually fairly decent. ACI Worldwide, nice one out here. It had a nice gap up. That gap started, when was that? The 7th of November with a little over 1 million shares. Came back into it with 1 million shares on February 10th. So you know that's going to get retested. The volume didn't come in lighter. You're into it yesterday with 540,000 shares. You had a nice little bounce out of here. Not a big deal. Just not a lot of cash to the upside on a lot of these. What else did I want to look at out here? Fuel cell. We were talking about that before. Interestingly enough, some of these are making some fairly nice confluence areas. And if we do get a move up, maybe some of these fuel cells will at least have a nice little bounce out of these things consolidating. I did notice that you had a very nice and tight confluence level on fuel cell just above $3. What is that? 302 to 298 or something like that. And that was kind of interesting to me. I like this thing is coming down and the volume is coming down nicely. I dislike, like I said before, all those shelf offerings that I'm seeing in these. But if you are looking for some decent patterns out here, this is one of them. And let's see what else we have going on. Yeah, still beating around the bottom out here. We'll come back in a few minutes. Still have plenty of time to give me a call before the end of the day at 877-927-6643.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we get back here, looking at the SLV, interesting chart down here at the lows. And one of the things I like, and if you look at the very bottom of my charts here where we're looking, I always want the highest volume within 0.5% of the low. And if you look yesterday at the SLV, 8.5 million shares. So actually, little okay out here. Day before, though, you really didn't have much movement, but a whole lot of shares, 20 million shares that day. Kind of interesting to see all that volume come in right before the low. 8 million shares, you had 22 before out there, so not uncommon to see a little bounce out of these. I wish this wasn't on a Friday going into the weekend where everybody seems to be looking for some where to hide their cash, either in oil or gold or anything, especially with the president and the is she the president or prime minister of Germany? I think she's prime minister of Germany, Andrea Merkel. Doesn't that sound like an American name? Yeah, Andrea Merkel. Yeah, she lived down the block. But Andrea Merkel. Anyway, she and the president were talking out in the Rose Garden about that nasty Mr. Putin. And I think we started to see a lot of people kind of look for anywhere where they could maybe park some cash over the weekend in case something bad happened. I mean, we're still off, 2 or 3 points on the S&P cash. So no real big signal out here. And probably going to have to wait for 1868 or lower on the S&P cash to actually get any kind of momentum. It's just hard for me to think that this is going to be, the last 3 or 4 days are going to be the strongest days of this month. We haven't had a lot of cash come in, which suggests that there isn't a lot of fund buying. And maybe that's a good indication that we're probably going to see a little cash come out of this market. Really don't like the way that the bonds are acting, especially with everybody dumping into them at the end. It looks to me like a huge bubble ready to burst. And some of those things may happen, but it just seems like this market, as I've described it before, the Lucy market, where we're Charlie Brown, we've got our long or short all set up, and just as everything's ready to plummet, Lucy pulls that ball away. I know everybody feels like that. It's just been one of those markets. In fact, if you ever want to look at one like that, I kind of vaguely remember seeing a market like this in 2003 and 4, but probably about 10% of this, and it lasted about 2 weeks. So I haven't really seen that much out here that would tell me that we're either breaking up or down today. But I think after a weekend, people start looking and see that market can't really get going at the height of fund buying. Now, maybe they're waiting for a little bit of fund buying Monday morning, but you pretty much have to be fully invested by the last 3 days of the month, first 2 days of the next month. And even why no one's got a gun to your head if you're a fund manager, most of the time they're done by today. And in fact, most of the time they're done in the morning on a day like this, and they're off to the Hamptons. This is May, of course. So as we look at this, I think probably Monday is going to tell us a lot more about gold and a lot more about silver than whether or not we just had a few people buying it going into a weekend of problems or potential problems. So I think we'll probably have a much better picture on probably the market as a whole, and gold and metal and crude on Monday. So I'm looking forward to it. We'll see you, same bat channel, same bat time on Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.